Hello and welcome. I'm Patrick Curtis, Chief Monkey of Wall Street Oasis, and this is Monkey to Millions, a show where you get a front row seat as I mentor young students and professionals to try and help them break into their dream jobs. In the first cohort, you'll meet 4 students, all preparing for intense job interviews while trying to also balance a personal life and schoolwork. The goal of this show is to shine a light on the struggles of trying to break into competitive positions with a non-traditional background and to give you a roadmap for your own success. My hope is that as you get to know these 4 impressive students, you are inspired to dream big. Remember, these are real people and this is their true story. Let's get to it. In this session with Grace, we cover how she finished up with finals in the past month and how sporadic her hours are at the current IB remote internship. I encourage her to use her free time on the lighter days to drill on the new WSO modeling courses that she has available to her, and we spend the last half of the session going through an investment banking technical mock interview. Listen in to find out how she did. All right, Grace, thanks for joining. I think this is either session 9 or 10. I always lose count. But how's it going? We are now in June, in the midst of summer. How's everything going?
It's been good. So I've finished with finals and everything for classes a couple of weeks ago.
Yay.
And then now I've been spending more time on my internship, and that's about it.
And how's that going? Like, when did you finish exactly? Like mid-May?
Mid-May. So
did you have a week to relax, maybe?
Kind of. I mean, the internship, it kind of like ebbs and flows with how much work I have. So I guess it depends on the day.
Yeah, I was talking to Andrew a couple of days ago, and he was saying some days are like 1 hour or nothing, and then the next day he's like doing like 18 hours, and he's up till like 2 a.m, or he's getting calls in the middle of the night. He's like, "What's going on?"
Right.
It's just sporadic. Is that similar to what's going on with you, or?
Yeah, just because normally they said if I were in the office, they'd have me working on a few live deals, but deal activity is obviously slowed down a lot too. So there's just not as much work that I can be doing as an intern, especially.
Yeah. So I know you have access to, I think you have access to our Excel modeling course. Did I give you access to that?
Not yet.
Not yet. Okay. So we just announced on the site, actually, we released the first 3 out of the 6 courses that'll make up the elite modeling package. So we have up and ready to go the Excel modeling, financial statement modeling course, and an LBO modeling course. That we're super proud of. All those 3. I think we're really excited about them in terms of how engaging they are and how much fun they are compared to a lot of what else is out there. The LBO modeling course is taught by an actual private equity guy who worked at a mega fund. So what they built, I say they because there's multiple PE professionals kind of combining, is better than any private equity model I ever saw. In my mind, I was like, it's crazy. It has like toggles for recaps, dividend recaps, toggles for like be able to layer in like a roll-up strategy and acquisitions and roll it in seamlessly. It's pretty awesome. So I'll send access to all that stuff for you so you can start digging through. On the lighter days, it probably makes sense. I think still the Excel modeling, even though are you getting some reps with that at your internship?
Yeah, I mean, a lot of the simpler stuff more, but even still just getting all the shortcuts and learning that.
Yeah, so that might be a good one just to start with because it's so foundational. If you can get just faster with it and drill and, like I said, I think I mentioned this last time, it's like the piano. If you can kind of get that, get it out from the frontal cortex to the hippocampus, the cerebellum rather, part of your brain where it's more like you're not thinking about the quick keys, they're just happening. It makes a big difference in terms of allowing freeing up your left brain, your frontal cortex to actually think about why you're doing what you're doing rather than just like trying to get the formulas and the nested if statements working properly and all that stuff. Okay. And then, so anything, are you working on any live deals?
No, not right now. But it sounds like maybe
I would be surprised if you were.
Yeah, they said in a few weeks, there's something that's on pause right now. So they might have me just start working on some initial things more in advance just to give me something to work on. So I'm still waiting to hear on that.
Okay. So yeah, I mean, I think a good thing to tide you over is to work on these courses. I mean, I also think it's important you take a little bit of a break because you push really hard your first year to get the internship, to do well in class. I think it's important to take at least a week just to decompress. I don't know how you decompress, whether it's working out or Netflix or whatever it is. Like, I think it's important that you do something like that and just actually maybe it's just a couple of days, but really just doing nothing. And just reflecting or maybe hiking or doing, whatever you enjoy. Maybe it's just reading a lot about fashion, whatever it is, I think it's really important to get that because otherwise it's just like nonstop.
Right.
Then stop.
Yeah, I gave myself about 4 days.
Okay.
So.
Well, if you need a few more, don't hesitate to take it this summer. There is a little bit of benefit of it being remote as you can kind of find those times for yourself when you're not feeling it a certain day to just relax, sleep in, take advantage now when you can. I can't do that anymore with the 3 young kids. So it's like, really just enjoy that. In terms of like the stuff they're having you do, so it's like pitch work, is a lot of PowerPoint stuff?
A lot of PowerPoint and then a lot of compiling, it's like buyer's books. So especially for some of these smaller companies where we don't do the whole process, it's more just kind of using my MD's network and then he gets a commission for it. So I do a lot of the work with kind of just doing research to find possible buyers for these really small companies, usually around 1 or 2 million revenue.
Oh, okay. And very cool. And then in terms of like what you think the summer is going to look like, you're just going to be at home, you think, for foreseeable future?
I think so. I think I'm going back to the city soon.
Okay.
So.
Oh, you are going to go back?
Yeah. So I've a friend through school who had a bedroom open there. So I'm probably going back up.
Yay.
Soon.
That'll be fun. A lot more fun in the city. Well, we'll see what it's going to be like this summer.
Right.
And how much things are going to open up and stuff, but it'll be fun to be up there, around your friends and stuff. So are you planning, so just this, basically just this, internship, maybe some self-study, anything else over the summer planned? Any trips or anything? Obviously maybe road trips instead of flying.
Yeah.
I don't know.
Not anymore. I'm not completely sure. Might go to the beach with my family. I was supposed to go to Seattle the end of August, so I'm not sure yet if that'll still happen.
Yeah, I have a beach trip booked in August with the family, but it's right here. It's only a half hour away. So I think we're going to be able to make that driving. Road trips, I think, are going to be a thing this summer.
Oh, yeah. I also have recruiting stuff starting up soon. So actually tomorrow I'm doing a mock interview with someone from the Fordham team at Goldman.
Awesome.
So that's been nice. I wasn't expecting them to offer to do mock interviews with me, but so that'll be good. I have that tomorrow, and then their applications open up July 1st.
Coming up. And so are they prepping you for like the hire review, or are you gonna have to go through that first?
Yeah. So I think that's what the mock interview is mostly supposed to prep for.
It's so odd, but you have a lot of experience now speaking into a camera.
Right.
So that's true. You have like the perfect setup. It's perfect. You just good lighting.
Right.
It's funny. Yeah. In terms of tips for that, I think just don't try to rush. Speak slowly, clearly. Smile as much as you can. Friendly. I think the people who struggle with that is they start, trying to like memorize all their answers, and then they get really nervous and they forget something. They have to go back, and then like their face is showing a lot of stress.
Yeah.
So I think it's a very odd time because we never had to deal with anything like that, and all the new people going through now everyone has to deal with it.
Right, now that even most super days are probably going to be virtual too. I don't know how that's going to work. But
you literally have the best training with this show, being on this.
Right.
But I can also do that. I mean, do you want to do like any sort of mock interview or anything like that? Maybe behavioral or technical?
I guess that'd be helpful.
When's our next thing scheduled? You said July 1st was your first thing?
That's when the applications open, and I think super days start maybe the week after that or 2 weeks after that, from what it sounds like.
So we'll get one more session in before then?
It sounds like it.
So it might make sense for us to just do a quick one
Okay.
right now if you're up for it.
Yeah.
Yeah, you're okay.
I don't know how prepared I am, but
That's okay. I mean, well, just to get a feel for kind of how comfortable you are. Have you had any chance to kind of go through any of the technical interview course?
I've gone through a lot of it a while ago, and then I've just been reviewing it lightly whenever I have a few minutes.
Okay.
So not real drilled in, but something.
Okay. So let me just ask you like a basic question. So what's your do you follow the market? Let's just start. Okay. Welcome Grace to the interview. Thanks for taking the time to join us.
Yeah. Thank you for having me.
So I'm going to just jump straight in and just ask you questions around, this is going to be a little bit more technical based interview. So, if you don't know, that's fine. But if you could just give your opinion on whatever you think, that'd be great. So I want to start off kind of just talking about the markets and this time we're in. Do you have any opinion on whether you think things are overvalued or undervalued right now?
Well, it does. It certainly seems that the market is ignoring a lot of the things happening currently. But then I also read something recently about what's called the boredom markets hypothesis and how a lot of the, increases in stocks currently are due to people having so much extra time on their hands. And so that's especially for retail investors in that they're coming in with a little bit extra money that they're almost okay to gamble with. So they're just putting money into a lot of things. And that's causing the increase in value of a lot of these stocks, despite many of the negative things happening in the world.
Yeah, it's very volatile. Any opinion on a certain sector you would invest in now or things you'd stay away from?
Well, airlines have definitely been an interesting one to watch. And also with that, companies like Boeing. And so I saw recently that Boeing walked away from their deal. They were supposed to acquire the jetliner business from a Brazilian aerospace company. And they had agreed on that the middle of last year. And then it got held up in antitrust review. But now they've walked away from it, especially because of well, some of it is to probably preserve liquidity because of not only all the scandals with the MAX, but then also just the market currently and the airline business in general and the cancellation of a lot of orders for them. So I think
would you put your retirement in Boeing or any airline stocks?
Not currently.
No, you don't like to gamble?
No.
So in terms of, do you trade at all or do you have any sort of portfolio?
Not anything serious, no.
Okay. Great. And tell me a little bit about, why, well, actually, I'm not going to ask that. That's more like a behavioral question. In terms of specifically valuation, have you done a lot of valuation work at your internship?
No, nothing other than some comparable companies analysis, but nothing very deeply analytical or detailed.
Can you tell me what specifically, like an example of some adjustments you had to make in some comparable company analysis?
When one analyzes a company and tries to determine the valuation, there are really three methods.
Sorry, I have a video playing. Sorry, go ahead. I don't know if you heard that. That was from one of the courses. Go ahead.
I haven't done anything with making adjustments.
No. So when you said you're doing comps, is it more just prepping though? How are you doing?
It's more just prepping and then taking averages of industry multiples.
But when you're kind of, walk me through like what a trading comps analysis is. Like, so what is the point of it? Like, why do we do a trading comps analysis?
So it's gathering companies that are in a similar market, a similar industry, and have similar products, and taking their current multiples trading on the market, such as EV/EBITDA multiple, for instance, and taking those together, often averaging them, finding a median, and to arrive at a multiple range to apply to the company in question and arrive at a market price and a market valuation based on those multiples.
And so In doing so, when I ask what adjustments you make, do you know the types of adjustments, or do you know like what that means in terms of like adjusting all the different companies such that there's kind of some standardization? Do you know why we do that?
Do you mean adjustments in the income statement?
I mean, like adjustments, like when you're doing a trading comp analysis, like getting one-time items, for example. Do you know what?
So that would be things like lawsuits and other.
Why do we do that? Why do we even do that? Why do we bother?
Because those don't give an accurate picture of the ongoing operations of the company, because they're just one-time events. They aren't going to impact how the company runs in the long term.
And so how does this differ from like a DCF?
The comparables analysis?
Yeah.
Well, in a DCF, it's not going to be market-based the way a comparables analysis is. So in comparables analysis, if the market overall is very high at the moment, then you're going to probably have higher multiples that you end up with, and thus a higher valuation for the company that you're looking at. But with a DCF, it's based solely on the projections of the cash flow you're making for that company in the future. So it's not going to be impacted by a currently highly overvalued or undervalued market.
What are the different ways in a DCF? What are you discounting those cash flows back to with?
Are you using the weighted average cost of capital, which is the required rate of return blended with consideration for the debt and equity structure of the company?
How do you get to even the cash flow? How do you even project that for the company?
The free cash flows?
Yeah.
You take earnings before interest and after taxes, so tax affected, and then add back depreciation, amortization, because those are non-cash expenses, and then subtract out capital expenditures as well as the change in net working capital.
Great. And would you expect, let me talk to me about where a lot of the value lies in the DCF. Is it in let's say you do a 5-year DCF, would you expect a lot of the value to be in the cash flows in the next 5 years or in the terminal value?
You would expect it in the terminal value generally, because the terminal value captures all the value for the cash flows beyond the projection period, which is supposed to be much more than just 5 years.
And do you know the different types of ways to do terminal value?
So there's the exit multiple method, which is simply applying a multiple to the cash flows from the last year of the projection period. And then there's the perpetuity growth method, which is where you take a growth rate, usually around the same growth rate as GDP, and apply that to the growth of the company's cash flows.
Okay. In terms of what you would expect to have the highest value out of, would it be trading comps, precedents, DCF in general?
Usually it's precedents, because the values paid in those acquisitions generally have a control premium in them. So that's going to lead to higher values paid for those companies.
Even more than DCF?
Well, DCF also can be on the higher end because of often optimistic assumptions about the future cash flows of the company.
Fair. Okay. When somebody says a deal is accretive, what does that even mean?
It means that when you look at the earnings per share, the earnings per share are going to increase when based on that acquisition. So
what do you mean increase of the acquired?
Well, it's not going to, in other terms, the earnings of that company and the amount of shares that are being added from that acquisition are not going to dilute the earnings per share of the acquirer.
Got it. Are you familiar with, are you familiar with like a LBO?
A little bit.
Can you tell me just like a basic, what is the concept of a leverage buyout and why do people do it?
So it's taking on a lot of debt and using that debt to then acquire the company through almost a shell company, and then either paying back the debt over time or making other operating adjustments to the company in order to increase its profitability, and then selling that company off several years later in order to make a profit.
Why would you lever up a company with so much debt?
Well, increased leverage can lead to much higher returns.
What about the downside?
as you increase leverage, it also becomes a lot riskier if you aren't able to make those operating adjustments to increase profitability.
Do you know what like makes a great LBO candidate? Can you list out?
Well, they're generally not going to be a cyclical company, because then they would be very sensitive to downturns, which could, again, increase the risk if you have a lot of leverage. So it's generally going to be something with stable cash flows and with a lot of room for operating improvements.
Anything else you'd look for?
Not that I can think of.
Okay. Yeah. Well, we can talk about it after, but yeah, that's good. You're right. In the ones you listed, I think you can get a couple more in there. Tell me about, do you know what a dividend recapitalization is?
No.
Okay. So dividend recap. Okay. It's basically when a private equity firm issues, a dividend to themselves by relevering. So let's say they have a company and they're not ready to exit. It's not a good time to exit, but the company is stable and has paid down debt over, let's say, the first 3 or 4 years of hold, and they know they're not going to exit for a few more years. They can actually go out, raise more debt, relever the company, and pay those proceeds out as a dividend to themselves. So it can help recapture some of the initial investment, reduce risk in terms of getting capital out earlier, and can help potentially help IRR. Although the theory would say that by relevering, you have less at exit as well. So, but by there's also a tax benefit of having that additional leverage. So, although that's changed, and I'm not going to ask you super technical 2017 tax question of like how everything changed, because it is crazy complicated. And like I learned a lot by going through our LBO modeling course. I was like, wow, this is insane in terms of like how taxes are adjusted based on like EBIT versus EBITDA versus like accelerated depreciation schedules. It's very easy to stump nowadays with with all of that. Do you know a little bit? Do you know a lot about like restructuring at all, or distressed companies, and kind of anything around that? Chapter 11, Chapter 7. Have you gone through any of that?
Not that much.
Okay. No. In terms of like what area of the business do you want to work in? Do you want to do DCM, ECM, M&A, industry groups? Are there certain industry groups that interest you?
I'm very interested in industry groups, and in particular something around real estate or infrastructure, likely.
What interests you about real estate?
I really like the tangibility of it. It's a common answer that probably is, but I guess because it's so tangible, it's something you get to really see the results of and see the impact of many years down the line as well.
Fair. Just a few more. Let's go to some more basic concepts. So tell me, working capital, like how should I think of it in a growing company?
Well, since the capital is going to be assets minus liabilities, if in a growing company, they're often going to be using a lot of their cash to invest in various things.
Wait, you said what? You said what is working capital?
Net working capital is current assets minus current liabilities.
Okay. But like, what does that mean exactly? What does it imply?
Well, a positive net working capital is going to be a source of cash, while a negative net working capital is going to be a use of cash.
What do you mean by that, positive or negative? So like if, let's say, I have a company that's growing 300% a year, would I expect my net working capital to be increasing or decreasing?
You would expect it to be decreasing.
Increasing. Your assets are growing. Yeah. So increasing. So it hurts it's a use of cash. So like sometimes, why would a super fast growing company run out of money?
Because they're going to be taking on a lot of debt, and they're not going to be able to monetize.
Let's say they have no debt at all. They don't raise any debt. They're just super fast growing. They're selling a ton, they're making a ton of business. How could they go bankrupt? Well,
it depends on the time it takes them to collect all of their revenue. So even if they buy all that inventory in advance, they might need to pay back for that inventory before they collect all the revenue from that.
Exactly. So the AR, accounts
Mhm.
receivable could be ballooning, even though they've technically sold, and they're owed all that money. If their AP isn't big enough to offset, and inventory is exploding too as a result, like you said, it can be a big problem. One that investors typically like to fund, though, instead of growing that fast. So in terms of, I think that's good. That's good for now. So I think that was awesome. I think you did an amazing job. I think there's very, very minor stuff. So the only one LBO candidate, I think you gave a couple correct, good answers: stable, not cyclical. You said specifically, what else did you say? Stable cash flows. Oh, non-heavy CapEx. I think
room for improvements.
Yeah, room for improvements. For margins. I think some other ones is non-capital intensive business, non-networking capital intensive business if they can collect, and it's good. Another thing you could say is just the management team. Do you have a management team specifically that you can like drop in place, or ways that like you kind of related to what you said, but I think management team's a big one that a lot of people look at. Another one's like a moat to protect profitability, which is related to the non-cyclicality, but something in terms of competitive advantage. I'm thinking more like a consultant in terms of the strengths, opportunities, threats, and weaknesses. What else? There's a few more. I'll get you should look at the LBO, the private equity interview course, just to get a little bit more background on that. Or when you take the LBO modeling course, you'll probably see that stuff. But I think that's good. I don't, sometimes they just like to test you, and I think your answer was perfectly fine, but it's good to just know additional stuff. And then you can say, in terms of why do they use leverage? You can say it can magnify returns, like, and stuff. You can say that. I think you said something along those lines, but just say, well, why does it magnify your return? I could have pushed you more and said, why does it magnify returns? You'd say, because the equity you're writing up front, the equity check you're writing up front is so much smaller. So changes in the additional cash you get out is become a bigger percentage IRR. Does that make sense? So it's like, it juices your returns, and it could also juice your losses too, because a small drop in profitability can hurt your potential exit dramatically, such that it magnifies losses. Great. What else did we do at the end? Oh, and then just the networking capital, be careful. It's the changes of networking capital. Changes, and don't say network. So networking capital is current assets minus current liabilities, but the change in networking capital is, if it's positive, it's a drain on cash.
Right. Okay.
Yeah. So when I said a fast growing company, make sure you're like, oh, that's a drain because it's growing. Just like we talked about, like, think of the fast growing company that can go bankrupt, and that'll immediately trigger in your head. That was great. And then we could push you on the behavioral maybe next, because I think behavioral is actually often under practiced. Did you feel good? Do you feel like, I didn't ask you the typical, like, $10 hits the income statement, what happened? Oh
yeah, I've practiced on that one a lot.
Okay, good. That's a very common one. The other thing that I think your answers around the stock market were great. Showed that you actually knew something. I would say that, you dabble a little bit, but mostly those index funds, you don't feel confident. You can just say, I don't feel like I have to know enough yet, but I do invest a little bit on the side for the little cash I have. Make a joke, in terms of next steps, I think you said it was early July potentially, where you have a interview. I think for the next one, we should really focus on behavioral. And so I'll ask you a lot of behavioral questions, because I think you're going to get that. And especially for like internship type, higher view type questions, it'll be like, why this company, why investment banking, why real estate, why, whatever group you're applying to. And so be prepared for that, but not answering just like, oh, because real estate is interesting, it's more tangible, but ideally something you can pull from your background. Okay. So like, remember the stories we talked about? And I edited some of that, but I think just pulling in wherever you can and just pointing it back to, oh, that's why, and that's why I really want, that's why I want this job. And bringing a little bit, I know it said mock, so it's tough, but bringing a little bit more like energy. To it. So it's like, you're excited about it. Not like you don't want to be bouncing off the walls, but I don't think you would do that because that's not your personality. You still want to be comfortable in the way you're delivering it. But just making sure you have enough energy there that they feel like, oh, she's like a go-getter, I know you are, but I think you're more of a quiet type. You're more like the quiet, hardworking, like more kind of like how I was when I was younger too. So yeah, any questions or thoughts on that? Was that fair critique?
Yes, that was very helpful.
Okay, good. Yeah, I mean, I don't think it was that helpful because I don't think there was that much I would have changed. I think it was great. I think that would definitely get you to the next round if I was the person deciding. There was just that one slip up at the end, which could have cost.
That's the one question I always get mixed up on.
So just think of it as like the fast growing company can go bankrupt because networking capital just keeps going. The change in networking capital is going up. It's going up. And so like it's draining, like it's all getting put into AR. Like their revenue, they're recognizing all this revenue, but they're not collecting on it.
Right.
So that's the easiest way to think of it. Anything else? Anything else I can do to help over this next month?
I don't think so. So you said the modeling course I can get access to online?
Yeah. Send me, actually send Bella at Wall Street Oasis an email.
Okay.
And tell her you're just a mentee. And you love access, and she'll get you access to those 3 that are available now.
Okay, great.
And that'll be an awesome, productive summer for you. Even not going into the office.
Yes, exactly.
Okay. Awesome, Grace. Well, have an awesome week, the rest of the week and weekend, and try to take some time for yourself too. So I think it's good. Yeah, I could tell you looked at the stuff a little bit better. You did better, I think, this time than the first time. So
that's good. Good to know.
You're getting better. So just keep that up. Keep reviewing it a little bit here and there, and then maybe as you get closer to July, start really honing in on the behaviorals and try and get practice at tying in your stories, because that should come naturally. Like as soon as they start asking you a behavioral type question, you shouldn't be thinking, what am I going to say to answer it? You should be thinking, what story am I going to bring in to show?
Right.
Like that should be your immediate, like just instinct is like, boom, story.
Right.
That's it.
Okay, great.
Okay. So, all right, Grace, we'll talk in about a month then.
Okay, great. Sounds good.
Thanks. Bye.
Bye.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.